Welcome to the Robert Hunt Financial Market Update. It's your host, Robert Hunt, where I look at the week's financial news that can be a little bit misleading, confusing, and take you off course. Now, to make it actionable, understandable, and clear. What a week. Therefore, what a show. On this spring break eve week, we had some excellent articles and some data for you. We will have time for Robert's Corner. I've talked to the producers about it. I've pushed back. We've heard you, listener. We're gonna have Robert's Corner. It's gonna be super fun. We're talking AI. That's right. We do it all here. This week's episode, we're gonna be looking at Nvidia, a Wall Street Journal article about it kind of running the show here on the stock market. We're also going to be looking at our favorite cryptocurrency, Bitcoin, and another Wall Street Journal article about the losses that can occur amidst the rise that you doubtless have seen. And then we're going to take a look at a touch of data, some S&P 500 return data that just popped off the page on the Twitter sphere. And we end with an artificial intelligence experiment that's proprietary to the Robert Hunt Financial Market Update. That's right. We ran experiments for you, the listener. This is the first time I've communicated about them. You, the listener, are going to get to hear all about it. You're going to want to stay tuned. It's at the end of the show. At the top, Wall Street Journal article by Mr. Jason Zweig, who we love, one of our favorites. Headline, it's Nvidia's stock market. You choose how to live in it. Subheadline, if you're going to kick yourself for not buying the hottest stock of the moment before it went up, make sure you also pat yourself on the back for the mistakes you didn't make. Ooh. Now, for those of you who are not familiar, Nvidia has been on a tear. This is a graphics processing unit company. They make chips, basically, and these chips, back in the day, were predominantly used for video games, and now they've been used for artificial intelligence, and so the demand for their products is sky high, and so is the stock. Zweig starts out with a joke. He says if you invested $1,000 in Nvidia stock at the beginning of this year, it'll be worth more than $75 million now. Ha ha, he kids. But what he does explain, did you know, listener, almost 28% of the S&P 500's gains so far in 2024 come from the astounding rise of Nvidia? Nvidia's stock is up 59% in 9 weeks after gaining 239% last year. Whoa. This week, the 10 biggest companies, this is Wig writing, constituted just under 1/3 of the total market value of the S&P 500. I'll read that again. The 10 biggest companies constituted about 1/3 of the total market value of the S&P 500. The top three, Microsoft, Apple, Nvidia, accounted for 17.9% of the total. Nvidia now is 4.6% of the total index. I love what Zweig does here, though. A little bit of financial history. Did you know, listener? I know some of my listeners were not alive during this time period. In the boom years of the 1950s, the 10 biggest companies, including AT&T, DuPont, General Motors, they actually regularly exceeded 30% of the value of U.S. stocks. Catch this. In July of 1955, General Motors alone, which was up 78% over the previous 12 months, amounted to 6.8% of the value of the entire U.S. stock market. This is according to the Center for Research and Security Prices at the University of Chicago. Boy, would I love to meet the people that work there. You think they've got some data in their head, some fun water cooler talk? Yeah, what a great center. Almost as exciting as the John Bogle Center for Financial Literacy. I would love a mashup of those two groups. Okay, what does all this mean for you? It is my conviction that right now, what Tesla experienced, I'm going to say, it was the post-COVID boom and really post-2010 where it was just the stock and people were jumping in and out of hand over fist trying to get a hold of the stock. That feels to be happening with Nvidia. Now, here's what I like. For the index fund investor, you saw it coming, but Zweig says this, which I love. You already have 4.6% of your stock allocation in Nvidia if you own an S&P 500 index fund. Now, it's almost the same data for the total stock market index fund, but So when you have this thought, and Zwig's getting in our heads here, when it seems like everybody but you has made a killing by buying Nvidia, hey, you own some of it. So that FOMO that a lot of people have, and if you think there's FOMO for someone who's got an index fund that owns Nvidia, what do you think the FOMO is for the person who owns an active fund but doesn't own Nvidia, or the person who engages in individual security selection but missed Nvidia? Now that is FOMO. The index fund investor, the seed was thrown in every field. So it will plant, it will grow when it's Nvidia. You don't have to worry about, did I pick this? Did I pick that? It's covered. And I think that's one of the secret sauces of index funds, is that it keeps you from engaging in too much FOMO because you're there. What's the FOMO? Where's the FOMO? You own a little bit of it. This article then talks about some personal stories where a Miroslav Stoyanov, software developer in Zurich, he tries to kick himself. He sold Nvidia in November of 2022 when the stock was just under 167. This guy's a tech guy, so he's smarter than most probably. He made a 27% profit in 2 months. He could have 10x'd his money, but he sold early. But this is a hard thing to do. This is a really, really, really hard thing to do. So what Zwig's telling us is, hey, enjoy the index fund. Don't engage in the FOMO. And by the way, if you're going to engage in FOMO, think about what you missed out on. He talks about Tesla and saying, hey, if you didn't buy Tesla, if you just stuck with your index, you missed the drop. Since its peak that November, Tesla's stock has fallen about 50%. Since its peak in November of 2021, it's fallen 50%. So if Zwig says, hey, if you're going to kick yourself for missing out on Nvidia, wait a second, you also missed out on some losers as well. So it is going to be hard when a particular stock like Nvidia rockets. You are going to invent stories for yourself. You're going to be in an insane asylum in a sense. You will invent narratives for yourself that say something like this. I could have seen it. I should have seen it. With AI and the chips, and I should have known. Maybe I need to get in because I missed out. That's probably a fairy tale you're telling yourself. If it was that easy, everybody would do it. But it's not. I believe this is not in front of me, but it just crossed my mind. I think Kathy Wood at ARK Investing, I believe they sold their Nvidia position like a couple years ago before the big run. This is like their thing. Don't quote me. Don't quote me, guys. It's just popping in my head. I say all that to say this is hard. This is hard for me. It's like when I tell my kids to do the dishes. This is hard for me. Hard to do the dishes. Yeah. We then look at a Bitcoin article. This is the most controversial topic the Robert Hunt Financial Market Update takes on, in my experience, because with Bitcoin, there's kind of the different ends of the spectrum. Very few people regarding Bitcoin are just kind of neutral, just kind of whatever. You either think it's crazy, it's poison, or it's the future of money. I want to talk about just price action generally. So when we talked to Nvidia and we talked about, wow, the stock's up a ton, what are you supposed to do? Nothing, of course. Bitcoin has gone through kind of a second phase here where various intermediaries, BlackRock, Fidelity, and others, are creating these exchange-traded fund products that make it even easier for the retail and institutional investor to own the product of Bitcoin. And therefore, we're seeing a little bit of pop in the price here, and there's a lot more FOMO going on. Okay. This article talks about a gentleman. This is by Joe Pinkster and Caitlin Ostroff. This is a gentleman named Joe Othote. He lost $500,000 on Bitcoin, but he didn't lose the faith. He bought it at $20,000. He watched it soar to $500,000 in 2021, and he had it all evaporate. I think he had some bad timing along the way. So this article then goes on to talk about just the challenges and difficulties of missing out. It's narratives of, I bought in here, and I sold there. I sold too early. I should have known. I was going to 69,000. Here's the great difficulty and danger with speculation, because that's what's going on. When you read these articles, I encourage folks and encourage myself, just eliminate the names of the asset. Put something else in there. Instead of Bitcoin, put Beanie Babies, or put art, or put any sort of other collectible. I understand that's deeply offensive to some of my Bitcoin guys. Just hang with me, guys. When you read these articles, you think, people aren't really solving for intrinsic value here. Of course, there's no discounted cash flows to measure against. We're not able to assign an earnings multiple to this. So when you hear people give their stories on investing in Bitcoin, it is deeply religious and feels like a lot of gut instincts going on here. It feels very difficult to repeat any sort of success that these folks have had. Now, I know. I can hear you already. For those that think this is a rebrand of the entirety of the monetary system, that's not why you invest. I hear you. But for most folks, they are using this particular coin as a speculative instrument. And that is what is not going to end well. Take away what you think will occur with our financial system. Take away what you feel will is happening with blockchain technology and all the merits of that, which I think is there. Focus on how people are actually using this stuff in the day-to-day investing world. It is a lot of speculation. You don't want to play in that game. You want to own things that if the market were to shut down for a decade, you'd still be happy to own. And that's a Warren Buffett truism and filter by which he looks at an asset. If I bought it today and the market makers, literally just shut it down, said, no mas, we're not trading anymore, you just own this, would I be glad I own it? And a lot of stuff makes it through that filter. The S&P 500 makes it through the filter. Index funds make that filter. International stocks make it through the filter. A ranch makes it through that filter. A farm makes it through the filter. Most productive assets that produce income streams, like a business, they make it through that filter. Some will not. And if it was me, and I own Bitcoin, and they told me they're going to shut the market down for a decade, I would be terrified. So my recommendation is to stay out the fray, guys. Just watch from afar. Do your best not to engage in FOMO. A lot of FOMO going on. Whenever the stock market and whenever asset prices are doing what they're doing, which is up, to the right, the FOMO happens. Let's talk about that up and to the right. Let's transition to some Twitter data. This is Ben Carlson. He listed out, and I could have gotten this myself, but it popped off the page when I saw it. He listed out the S&P 500 returns from 2010 to present. I'm just going to read these to you. 2010, S&P 500 is up 14.8%. 2011, up 2.1%. 2012, up 15.9%. 2013, up 32.2%. 2014, up 13.5%. 2015, up 1.4%. 2016, up 11.8%. 2017, up 21.6%. Guys, that's a 7-year run with no drops. Our first drop. 2018, down 4.2%. Followed by 2019, up 31.2%. That makes the 2010s have an annualized return of 13.4%. Yikes, that's high. Here we go, 2020. 2020. Up 18%. 2021, up 28.5%. 2022, down 18%. 2023, up 26.1%. 2024, up 8.2%. So in the 2020s, we so far have an annualized return of 13.6%. Almost identical to the 2010s. That popped off the page. I sometimes forget, wow, that just feels like an uninterrupted just march upward. Just nuttiness. All along that journey. If we were to look back and say, well, that's 14 years. How many times were you told not to trust this market? Or if you were in cash, let's just wait a bit. It's been particularly after 7 years in a row of upward markets, 2010 to 2017, maybe you should stay in cash. I mean, it just didn't work for you. So markets are tough to predict. Don't try to just get in. There is same guy, S&P 500 total returns in the last year. This is of this week. It's up 27%. Last 3 years, 38%. 5 years, up 97%. Last 10 years, up 224%. This is the S&P 500. And then it shows the Russell 2000 small stocks. It's just way worse, which is why it's dangerous to slice and dice too much. 1 year up 8%, 3 years down 3%, 5 years up 39%, 10 years up 95%. Just own the whole market. Don't try and slice and dice. It's going to be tough to stick with it. the older I get, the more convinced I am that complexity is not your friend. It's not my friend. Sometimes it's the high-priced financial advisor's friend because you can't see through all the crazy. And then we close with artificial intelligence. Oh yes, this podcast knows no bounds. Where others fear to trod, we push forward with courage. This week I ran an experiment. I have followed the artificial intelligence boom and have been playing around with some of the tools that are now available to us free of charge. Wouldn't you know, I sought to replace myself. I sought to say, you know what? Let me see if some of the questions that I was asked, I could just ask an AI agent, a ChatGPT, would it answer correctly or would it improve upon my answer? So I started out and actually saved this conversation. ChatGPT will let you, I emailed it to myself. I said, at what income level should I use a traditional 401k instead of a Roth 401k? For those of you on this podcast in the know, you know that a traditional 401k, you get the tax deduction on the front end, but not the back end. It comes out as ordinary income. On the Roth, you pay taxes, but you're able to put it in there knowing you get to pull it out without tax. Well, ChatGPT just knocked it out of the park. Didn't try to answer more than it could, gave a great overview of the answer. I thought, uh-oh, the robots are coming for me. I then said, all right, construct an investment portfolio for a single 60-year-old male with $2 million and income needs of about $70,000 per year. And it constructed a great portfolio. No prompting from me, doesn't know who I am. It was a little more complex than I wanted. On the fixed income side, I thought it was actually the right allocations, but they just made it more complex than they needed to. They sliced and diced a little more than I would have. So on bonds, they had treasury bonds and corporate bonds, municipal bonds, about 40% equities. They did great here. Domestic, international, they did REITs, which you don't need to do in cash, but it was good. And then they did alternative investments, which I wouldn't have done. I then said, all right, well, just, make it simpler for me. And they did. They used index funds. I then said, create a withdrawal strategy. This is where they botched it. This is where the robot messed up. The robot the robot knew like all the formulas, knew all the right data. I was starting to sweat a little bit. Told me the exact tickers. I said, give me tickers for this. Gave me the good tickers. The AI knew which ETFs to buy. Blew my mind. But it messed up. Whew. So I slept the night I ran it. It messed up the withdrawal strategy. It was bizarre. Everything was right. I then said, how long? And then I said, what if I pulled $200,000 a year from this guy with $1 million portfolio based on this portfolio construction you did? It gave me a bizarre answer of oh yeah, the money would run out in about 61 years. That of course is impossible. There's no way. If you just put the money in cash, it'd basically be gone in 5 years. So there's no way there's an investment that can survive that withdrawal rate of basically 20% a year. But what I found interesting is I said, hey, ChatGPT, you actually messed that up. They said, oh yeah, I did. My bad. Here's the fix. And it fixed it. It was correct. So they're getting close, listener. I want you to know the day that the AI gives this podcast, I will let you know. I won't sneak it in there. The AI does now know how to replicate my voice. That is on offer. And the AI can write the podcast. I just don't think it's as good yet. They don't have the spunk yet. They don't have the cross references to A&M or the Old Testament. They don't have that. Do I worry they may one day? Yes. But until that day, know that a human is behind the microphone here at the Robert Hunt Financial Market Update. And this human knows exactly the mantra to give you, and that's to keep those costs low, that investing simple, and that time horizon long, because that's what's going to give you the best shot on your investing journey. Until next time.